All right, everybody, ready for Talk Tickers?
You bet.
Today we're diving deep. Dollar General's Q3 2024 earnings call.
Oh, yeah, DG.
We got the transcript, the news, the stock data, all the good stuff.
Ready to get into it.
So we're going to break down what really matters from this call.
The things that might surprise you.
Yeah, and help you understand where Dollar General might be headed.
Smart shopping choices.
Or even potential investment angles. We're going to touch on all that.
Love it.
Now, Dollar General, huge GE player, right? Especially in rural America.
Essential retailer.
But everyone is feeling the squeeze these days.
Yeah, tough economy.
So how does a company like DG keep growing in this environment?
That's the big question.
Exactly.
Yeah.
That's what we're unpacking today. So let's kick it off with the headline numbers from the call.
All right.
Revenue up 5%, not bad.
Solid.
But same-store sales, that key metric, only grew 1.3%.
Interesting.
What's the story there?
Well, that's where we see consumer behavior really shaping things.
Okay.
So that growth isn't from like tons of new customers flooding the aisles.
Yeah.
It's really from two things: higher prices,
Okay.
meaning your dollar doesn't go as far.
Inflation rearing its ugly head.
Yep. And then people buying more items per trip.
Makes sense.
Fewer folks walking through the doors, but when they do, those baskets are fuller.
So is this a sign that people are getting savvier,
Could be.
stretching their budgets further maybe, instead of like a big weekly shop?
Yeah.
It's more frequent trips to DG
Yeah. Just get what they need that day.
to get just what they need.
Right. And that plays into what Dollar General's CEO highlighted.
Yeah.
They're really focused on being that fill-in trip for their customer.
Interesting.
But remember that 1.3% growth that is partly fueled by inflation?
Right.
Things cost more?
Of course.
So naturally, revenue is going to go up.
Yeah.
Even if people aren't buying more stuff.
Right. Just the same amount of stuff costs more.
Exactly.
Okay, that makes total sense.
Mm-hmm.
There's this one detail that caught my eye, though.
Okay. What is...
The last weeks of each month, they saw the weakest sales.
Mm-hmm.
Why does that matter?
Right.
It seems like a small thing.
It might seem small, but it tells us a lot.
Okay.
It's a big story about the DG shopper.
Right.
Remember, we're talking about their core customer. Folks that are really sensitive to price changes, to economic shifts.
Yeah.
So those weaker sales at the end of the month suggest a pattern we've all heard of.
Yeah.
Paycheck to paycheck.
Oh, yeah, for sure.
So money gets tight at the end of the month.
Makes sense.
Even those fill-in trips become less frequent.
So if this keeps up,
Yeah.
what does it mean for DG's future?
Right. Is this like
Is this a canary in the coal mine?
a sign of trouble brewing, or can they adapt?
That's the million-dollar question.
It is. And if those pressures on their core customer keep mounting,
Yeah.
it could really put a cap on DG's growth.
Hmm.
But they're aware of this,
Okay.
which is why we see them making moves like that Back to Basics initiative.
Okay, yeah, let's talk about that.
Right.
What exactly does that mean, back to basics,
Yeah.
for a company like Dollar General?
Right.
Did they just start, like, dusting the shelves more?
Well, it's more than just dusting, though I'm sure that's part of it.
Of course, yeah.
Back to Basics is about nailing the fundamentals.
All right, so...
Making sure the shelves are actually stocked with what people want.
Right.
Keeping the stores clean and inviting.
Mm-hmm.
And maybe most importantly, making sure their employees are happier.
Happy employees, happy customers.
Right, exactly. That's the idea.
But how do we know if it's actually working?
Right.
What did they say on the call about results?
Well, they dropped a pretty impressive stat.
Okay.
Customer satisfaction is up a whopping 900 basis points.
Whoa.
Now, basis points might sound like financial jargon, but think of it like this. If your favorite sports team
Okay.
improved their win rate by 9 percentage points, you'd be pretty thrilled, right?
That's huge.
Yeah.
That's how big a jump this is for DG. Okay, wow. That IS huge.
Yeah.
I'm picturing much cleaner aisles and friendlier cashiers now.
Yeah.
But DG also had to deal with those awful hurricanes, right?
Fortunately.
How did that impact their bottom line?
Yeah. Those hurricanes, tough blow.
Yeah.
While the impact on sales was minimal.
Right. People still need essentials.
People still got to get their stuff no matter what.
No matter what, yeah.
They took a $32.7 million hit
Ooh.
to their SG&A. That's selling general and administrative expenses.
Okay.
In Q3 alone. And they're projecting another $10 million hit in Q4.
Ouch. That's got to sting.
Yeah, it adds up.
You'd think those kinds of costs would make them hesitant to keep investing.
Right, you would think.
But they're actually still pushing forward with new stores and remodels, right?
Right, they are. And that's what's really interesting here. It seems counterintuitive, right?
Yeah, totally.
But here's the thing. Dollar General's playing the long game.
Okay.
They're not letting short-term setbacks derail their overall strategy. They're still full steam ahead.
Interesting.
With an ambitious plan for 2025.
Okay.
We're talking a whopping 4,885 projects.
Whoa, hold on. Break that down for me.
All right, so
4,885 projects.
Yep.
What exactly are we talking about?
So it's a mix of everything.
Okay.
They're aiming for 575 brand new stores in the U.S.,
Wow.
mostly in that larger 8,500 square foot format they like, plus another 2,000 full remodels.
Okay.
And get this, they're also planning a staggering 20,250 of those Project Elevate mini makeovers.
The mini makeovers.
Mini maker. Oh, and they haven't forgotten about international expansion.
Right.
Up to 15 new stores in Mexico
South of the border.
on the docket.
Okay, so 4,885 projects. That is a lot of construction.
It's a lot.
But it sounds like they're sticking to their bread and butter. Rural America.
Absolutely.
Are they going to put a Dollar General on every corner, or what's the plan here?
Well, you're right. They're definitely doubling down on what they know works. Over 80% of those new stores will be in rural communities.
That makes
But it's not just about having more locations.
Right.
They're also expanding what they offer.
Okay.
Like they're adding fresh produce to about 300 of those new stores in 2025.
Wow.
Bringing the total number of DGs with fresh produce to almost 7,000.
Okay, so they're not just the place to grab
Right.
cleaning supplies and snacks anymore.
Nope.
They're becoming a genuine grocery option,
Yeah, for sure.
especially for those rural communities where access to fresh food
Right. Can be limited.
can be limited. Yeah.
Yeah, that's a big deal.
Smart move, if you ask me.
I think so.
It makes them even more essential to their customers.
Exactly. It's about becoming that one-stop shop
Yeah.
for everything you need, whether it's pantry staples, household goods, or even those fresh ingredients for dinner. But there is one area where they are pulling back a bit.
Okay.
Their pop shelf concept.
Wait, Pop Shelf, those are the stores with all the like trendy,
Yeah.
Instagrammable stuff, right?
Exactly.
I thought those were doing well.
They are doing well.
Why hit the brakes on that?
But here's where understanding the bigger economic picture comes in.
Okay.
Pop Shelf thrives on discretionary spending.
Right.
Those fun impulse buys people make when they feel good about their finances.
Mm-hmm.
In a tougher economy,
Yeah.
people prioritize
Necessities, yeah.
necessities.
Makes sense when you're worried about making rent,
Right.
putting food on the table.
Exactly.
That cute flamingo plant just doesn't seem as essential.
Not so much.
Yeah, you gotta eat.
So Dollar General recognizes this shift in consumer behavior.
Okay.
So they're focusing their resources on what's performing best right now,
Mm-hmm.
their core Dollar General brand.
Which caters to those essential needs.
Exactly.
Smart.
Back to basics.
All right, back to those store makeovers.
Okay.
They're really ramping things up with Project Elevate.
Yeah, a lot of those.
But how do we know if those mini makeovers actually work?
Right. Are they worth it?
What's the ROI on a fresh coat of paint
Right.
and some new shelves?
Well, they're projecting a first-year comp sales lift of about 3 to 5%
Okay,
for Project Elevate stores.
not too shabby.
Not bad.
Especially considering
Mhm.
these are way less expensive than full remodels.
Way less.
And speaking of full remodels,
Yeah.
those are expected to generate a 6 to 8% sales bump in the first year.
Yep. So whether it's a mini makeover or a full-blown renovation,
Yeah.
it seems like these investments pay off.
Yeah.
It's not just about making the stores look pretty.
Right.
They're actually driving sales.
Okay. But are they just throwing money at the problem, or
You're right.
is there a strategy here?
Well, it's all part of that bigger picture we keep talking about.
Okay.
These remodels are about creating a more appealing shopping environment.
Mhm.
They're improving product selection,
Okay.
maybe even adding some of those higher margin items
Oh, yeah.
that draw people in, and generally just making those stores more pleasant to shop in.
Right. Creating that experience.
Yeah, and combine that with back to basics,
Yeah.
and you have a recipe for success.
Right. And that's reflected
Mm-hmm.
in those customer satisfaction numbers we talked about earlier.
Yeah, that huge jump.
A 900 basis point jump. This is huge.
Yeah.
Got to be a huge morale booster
Yeah.
for the Dollar General team.
From the corporate folks.
Yeah,
All the way down to the cashiers on the front line.
exactly.
Yeah.
Absolutely. So it sounds like Dollar General's firing on all cylinders,
They are doing a lot of things right.
focusing on both the big picture and those tiny little details
Yeah.
that make a difference.
The little things matter.
They're expanding.
Mm.
They're renovating.
Mhm.
They're making sure their customers are happy.
That's key.
But they're also innovating.
Yeah.
Didn't they mention something about same-day delivery on the call?
They did.
That seems like a game changer, especially for their rural customer base.
Yeah, you're right. That is a big deal.
Yeah.
And it gets to the heart of what Dollar General is trying to achieve.
Mm-hmm.
They're not just expanding their physical footprint,
No.
they're expanding their reach into customers' homes.
So instead of waiting for customers to come to them,
Right.
they're bringing Dollar General to the customer's doorstep.
That's the idea.
It's like they're taking a page from Amazon's playbook, but with that DG twist.
But they're doing it in a way that makes sense for their business model,
Yeah.
using third-party partnerships to keep costs down.
Right, they're not building out a whole
Biz.
massive delivery infrastructure. They're leveraging existing networks,
Right. Using what's already out there.
like DoorDash, to get those orders delivered
Exactly.
quickly and efficiently.
It's a smart move.
Yeah, it's smart.
It shows they're not afraid to experiment and
Not-
try new things to stay ahead of the curve.
But all this expansion innovation,
Yeah.
it has to be expensive,
Mm-hmm.
right? Are they just racking up debt
Yeah. Are they
to
just
fund all this growth?
going into debt? Are they over-leveraged?
Yeah.
Well, they're actually being quite responsible with their finances.
Okay.
Their cash flow from operations is strong,
Mm-hmm.
up 52% year over year, mainly due to improved working capital management
Okay.
and those inventory optimization efforts we talked about.
Mhm.
So they're generating cash, which gives them flexibility
Yeah.
to invest in all these growth initiatives without breaking the bank.
So they're making money, they're investing it wisely,
Hmm.
and keeping those costs under control.
That's the goal.
That's like a winning formula to me.
So far, so good.
But let's shift gears for a moment
Okay.
and talk about their long-term prospects.
Right.
We know they're doing well now, but what about the future? Are they set up for continued success?
That's what we got to figure out.
Okay, so we've talked big picture strategy, but now let's zoom in on the financials.
Mm-hmm.
What stood out to you from their Q3 numbers? What should our listeners pay attention to?
Yeah, definitely some bright spots, but also some areas where they're feeling the pressure, which, a lot of people listening can probably relate to.
Oh, for sure.
Their gross profit margin took a little dip, down 18 basis points.
Hold on basis points. For those of us who don't speak fluent Wall Street, what does that actually mean?
A fair point. Imagine you're baking a cake and the recipe calls for 100 units of flour. A basis point is like one of those units. So a drop of 18 basis points means their profit margin on each sale is slightly smaller.
Okay.
It's not a huge drop, but it's something to watch.
Okay. So their profit margin shrunk a tiny bit.
Yeah.
Why is that happening? Did they suddenly start giving everything away?
Not quite. It's a combination of factors, and it goes back to that consumer behavior we were discussing.
Mm.
They had to increase markdowns, meaning more sales and discounts to attract shoppers. There was also a bit more inventory damage than usual, and a bigger chunk of their sales came from consumables, things like groceries and cleaning supplies, which generally have lower profit margins compared to, say, clothes or home decor.
So they're feeling the squeeze from those price-sensitive shoppers, having to balance attracting customers with keeping their own business profitable. It's a tough spot to be in.
Absolutely. But here's a silver lining. They actually managed to improve their shrink rate.
Shrink? Is that like when your clothes shrink in the dryer? Because that's a problem I know all too well.
I wish it were that simple. Shrink in the retail world means losing inventory, usually due to theft damage or just plain mismanagement. It's been a big issue for retailers lately, and it eats into their profits.
Ah, okay. So less shoplifting and broken merchandise. That's good, right?
Exactly. They reported a 29 basis point improvement in shrink year over year, so they're making progress. But remember, those hurricanes we talked about, those also took a bite out of their profits in the form of higher SG&A expenses.
Right. Those unexpected costs can really throw things off. So
Yeah.
how bad was the damage, financially speaking?
SG&A expenses jumped 111 basis points as a percentage of sales, mostly due to those hurricane-related costs, but also things like higher labor costs and depreciation. It wasn't a cheap storm, to say the least.
Yikes, talk about adding insult to injury. But despite those hurricane headaches and the profit margin squeeze, they still managed to pull out earnings per share of 89 cents, right?
They did, though. That's down almost 30% compared to last year, but considering the hurricane impacts, it could have been a lot worse. They're showing some resilience for sure.
Okay, so they're weathering the storm literally and figuratively. But what about their overall financial health? How's their balance sheet looking? Are they drowning in debt?
Actually, no, they're in pretty good shape. They ended Q3 with $7.1 billion in merchandise inventory, which is down 3% from last year and 7% on a per-store basis. That tells me they're being smart about managing their inventory, not overstocking and risking those dreaded markdowns we talked about earlier.
So they're keeping their shelves stocked with what people actually want. But not going overboard. That's good for their bottom line and probably less wasteful too.
Exactly. They're also laser focused on reducing their non-consumable inventory, which is down 6% year over year.
Yeah.
They're really aligning their inventory strategy with those consumer trends we discussed, focusing on essentials and being cautious about discretionary items.
Smart move. It's like they're reading our listeners' minds, knowing what's going to fly off the shelves and what's going to gather dust. But inventory management is just one piece of the puzzle. What about their cash flow? Are they actually making money?
Their cash flow from operations is looking very healthy, up a whopping 52% year over year. That's largely thanks to their efforts to improve working capital management, particularly those inventory optimization moves we just discussed.
So they're making money and they're managing that money well. That gives them more freedom to invest in growth.
Right. And they're also using some of that cash to pay down debt, which is always a good sign. They repaid $750 million in maturing notes during the quarter.
Debt reduction, smart inventory management, strong cash flow. It's all starting to sound like a personal finance guru's dream.
Well, I wouldn't go that far, but they're definitely making sound financial decisions now. Let's talk about what they see on the horizon. What's their outlook for the rest of the year, especially with the holidays coming up?
Yeah, that's the make or break season for a lot of retailers. Are they expecting a jolly good holiday season or are they bracing for a lump of coal?
Well, they're being cautiously optimistic, but they did update their guidance to account for those pesky hurricanes.
Yeah.
They're now projecting net sales growth of 4.8 to 5.1% for the full year, with same-store sales growth in the range of 1.1 to 1.4%.
So a slight dip from their previous expectations, but still growth overall. Are they worried about people tightening their belts during the holiday season?
They are acknowledging the broader economic uncertainty, and they also point out that there are 5 fewer shopping days between Thanksgiving and Christmas this year, so they're facing a shorter holiday season, which adds another layer of complexity.
The calendar isn't doing them any favors this year, but they're still expecting a profitable holiday season, right? Just maybe not as merry and bright as they initially thought.
Exactly. They're factoring in those potential headwinds, and they're also expecting continued pressure on their gross margins due to increased promotional activity and that shift towards lower margin consumables.
So they're walking a tightrope, trying to keep prices low enough to attract those budget-conscious shoppers while also protecting their own profits. Not an easy task.
It's a delicate balancing act for sure, but remember those improvements in shrink they're making that should help offset some of that margin pressure, and their Back to Basics initiative is also focused on operational efficiency, which can contribute to healthier margins over time.
All right, so to sum it all up, Dollar General is facing some challenges, what business isn't these days, but they're also demonstrating a lot of resilience. They're executing on their plan, they're investing strategically, and they're adapting to those changing consumer behaviors we keep coming back to.
Exactly. While nobody has a crystal ball to predict the future, they seem to be well positioned to navigate whatever comes their way.
And that's why Talk Techers will be keeping a close eye on Dollar General, bringing you the insights you need to make informed decisions.
Now, before we wrap up, are you ready for the most anticipated segment of our show?
You know, it's time for This Is Not Financial Advice.
Where we take everything we've learned and spin it into a wild but maybe brilliant trade idea. So we know Dollar General is all about serving rural America, right? They're becoming that one-stop shop for everyday needs. But what if they took it a step further?
Ooh, I like where this is going. Lay it on me.
What if Dollar General tapped into the growing trend of remote work and offered co-working spaces within their stores?
Whoa, that's thinking outside the big box. Oh, I love it. Imagine rural residents having access to high-speed internet printers, maybe even a little coffee station, all while they're picking up groceries or grabbing some household supplies. It's like a mini WeWork, but with that Dollar General charm.
Exactly. Dollar General could become the community hub for remote workers in small towns, providing a much-needed service and generating some extra revenue. They could even partner with existing co-working companies to manage those spaces and create a seamless experience.
And think about the synergy with their same-day delivery service. Remote workers could order lunch office supplies, whatever they need, and have it delivered right to their co-working station.
It's a win-win convenience for the remote workers and increased sales for Dollar General. They could really corner the market on rural co-working, especially as more people embrace flexible work arrangements.
I'm sold. This is brilliant, but before anyone rushes out to buy DG stock based on our genius idea.
Remember, folks, this is not financial advice.
Just some food for thought, inspired by the data and the trends we've explored today. Always do your own research before making any investment decisions.
Well, folks, that wraps up our deep dive into Dollar General's Q3 earnings call. We hope you found it informative and insightful.
Thanks for tuning in to Talk Tickers. Stay informed, and until next time, happy investing.